Morning, everyone. I am Kim Leininger. I'm the President and CEO with Geauga Growth Partnership, and I'll serve as your host this morning for our webinar, PPP Round 2, Getting Ready. We're really pleased to have you with us this morning. You can submit any questions during the program using the chat feature in Zoom. So I would encourage you to do that. You may send them to everyone, and I would encourage you to do it that way, just so that everyone can see the questions that are being asked. If you prefer, you can also send it privately to Tim, one of our presenters this morning. So if you want to submit questions, you can do it that way. If you're joining us by phone only, you can submit your questions by email to info@geaugagrowth.com. So again, that's info@geaugagrowth.com. We will be keeping all of your microphones muted. So if we haven't muted it already, if you could just kindly do that for us. That way we don't have any interruptions while our speakers are presenting today. All the programs that GGP brings to you are those that come out of conversations as a result of questions that we're getting, conversations we're having with businesses around the county. And we really are trying to do our best to connect with the experts out there in the field on this topic. And I say that lightly because I think today's topic is ever changing, right? When we had round one of PPP and forgiveness, things were changing overnight. So I really, today, I think though, we have some really great experts to talk to you about PPP Round 2. I want to let you know, should we run into any technical difficulties, we will close the Zoom and we will reconnect using the same link you used this morning to join this session. So again, if we run into any technical difficulties, your Zoom will close out, and we encourage you just to log back in using the same link you used this morning. I want to go ahead and do a quick thank you to our annual sponsor, Geauga Medical Center. Without their support throughout the year, it would be very difficult for GGP. And so really thank you to Geauga Medical Center for all of their support of GGP, as well as all the wonderful things they're doing to care for our community right now during COVID. So I'm going to go and get ready here to introduce our speakers. We're really pleased to have with us Tim Petrey and Angela Johnson from HD Davis, which is a GGP member company. So thank you to both of you. They're going to be sharing some information with us today about the stimulus payment. We're going to even touch on PPP Round 1 because we got some good questions about, hey, I didn't apply for that. Do I just apply for Round 2? What happens next? And we're going to talk about PPP Round 2. So without further ado, I'm going to go ahead and introduce them. So Tim is the manager partner for all three HD Davis CPA offices in Ohio. He has 12 years of experience providing tax, accounting, and consulting services to manufacturing, retail, service organizations, and others. In his capacity as managing partner, Tim performs the primary or concurring review of most of the tax and consulting work that is conducted in the three offices. He has a BA degree from Youngstown State University, and he's involved in many professional and civic organizations, such as the American Institute of Certified Public Accountants. He's a member of the Ohio Society of Certified Public Accountants. He's the treasurer of OWOW, I think that's how you would say that, which is the Children's Science Museum. He's a YSU Accounting Mentoring Director, and he was awarded the 2014 YSU Alumnus of the Year and awarded the 25 under 35 in the Mahoning Valley. In addition, we have with us today Angela Johnson. Angela's been with HD Davis team since 2018. She started as an intern when the Tax Cuts and Jobs Act had taken effect, and has proven to effectively communicate changing relevant information to their clients, which we're so excited about, Angela, because some of these topics can be pretty tricky. So Angela recently passed all three SEE, the Special Enrollment Examination exams, to become an EA, or an enrolled agent, and is merely waiting on the IRS to approve. She also has a BA degree from Youngstown State University. So Angela and Tim, we're really pleased to have you here with us this morning, and I'm going to turn the floor over to you.
Thank you for having us, Kim. You guys have been wonderful neighbors to us in Newberry there. We're a few doors down in the executive park with the GGP. They've been fantastic over the course of the last 6 years in helping us continue to adapt and learn the community up there. So thank you guys for everything that you do. I wanted to kind of let you guys know how we tend to operate our webinars. Angela Johnson will be running the slides and going through all of the material. I'll turn off my video and just kind of monitor the chat and things like that. We've been doing a ton of these webinars with some of our local organizations throughout between Cleveland and Pittsburgh. I will say that Angela Johnson has done an amazing job of putting together the relevant information here. We've gone through this webinar a couple of times, and in the last 3 to 4 weeks, just as much as all of 2020, most of what the PPP and a lot of the changes in our legislation have put us in a position where we have been building the plane as we are flying it, so to speak, especially with the PPP program. It is ever changing. Unfortunately, there will be plenty of questions that we will have to direct you to monitor the frequently asked questions for the SBA. We'll do our best to answer as many and all of your questions throughout. And thank you guys very much for having us. I will pass this along to Angela.
Geez, well, thank you, everyone. Thanks for the introduction. And yeah, Tim hit the nail on the head. So basically, there's a lot of information out there. And as you know, the PPP has changed with round 1, and now we have round 2. We have a lot of stimulus questions for these stimulus payments. So we're really going to do our best to answer questions on those. So with this new law, you might know that it includes about $900 billion in relief. We're not going to cover every single part of that law. We are just going to focus on the stimulus payments and the PPP because we feel that this is probably the most relevant to you, and it's certainly where we have the most questions at our firm. So we'll just jump right into it. We basically segmented this out in round 1, round 2 for both the stimulus payments and the PPP. That way you can have the idea and get that comparison. So for the stimulus payments, last year, you might have gotten a payment. These were based on 2019 tax returns if you filed them. If you didn't file them, then you would have had to use that IRS non-filer tool on their website, which was up until I think November, around November, and you would have had to input your information there. Of course, you have had to need a social security number for yourself, your spouse, any qualifying children that you would have so that you can get the full payment that you're entitled to. Those claimed as a dependent on another's tax return wouldn't receive that payment. So, you know, those people don't qualify for the stimulus payments. These payments were made through the end of last year. And if you are entitled to the payment, but for whatever reason you didn't get that payment, now we can recalculate that payment on your 2020 tax return this tax season 2021. It will be a credit. It's a recovery rebate credit, as they are calling it. So essentially, you're just going to do the worksheet, do a little bit of calculating, and see if you get that payment and show it on there. Remember that these payments are not taxable income to you. And like I was mentioning with that credit, you know, that's basically just going to give you your payment on your tax return. It's going to either lower your tax due or increase your tax refund by whatever payment that you're getting. Maybe the IRS just didn't have all of your information to figure out if you were eligible. Maybe you owed child support and your payment was garnished back then, but for round 2, that's actually not going to apply. Your payments will not be garnished to cover past due amounts for round 2. Say maybe in 2020 you had a child or you adopted a child, therefore that child was not listed on your 2019 tax return. Now you can claim them on your 2020 taxes through this recovery rebate credit. Of course, you're not going to get the payments twice. And what I mean by that is, you know, you're not going to get double round one, double round two through this credit. You're going to get round one, round two, if you qualify and are eligible one time. So you're not going to have any double dipping there. And for round one, just to again recap what that was all about, individuals who made less than $75,000 in AGI would have received $1,200. Married couples with less than $150,000 in AGI would have received $2,400. Head of household, you would have received $1,200 if you made less than $112,500 in AGI. And then children under 17 would have gotten $500. And of course, these have phase out limits as well. And again, unfortunately, not everyone was entitled and is entitled to receive this first round stimulus payment. College kids, unfortunately, just didn't get this benefit the first round. If you're over 17, you would have only gotten a check if you filed on your own, independent of your parents or someone who would have claimed you. All right, now we're going to get into round two. So mostly everything is the same. The AGI thresholds and payments amounts change though. So once again, it's going to be based on the same information. So 2019, if you are not a filer, you would have had to go through that IRS non-filer tool on their website. You should not have to do anything if you previously used that non-filer tool. The IRS will automatically send you that payment. So, say you make less than the standard deduction, or you just, you have federal benefits like Social Security, you're just not required to file. And maybe you did that the first time around. You don't have to, once again, go in and do that. The IRS has that information now. They're just going to automatically generate that payment and get it to you. So, once again, you need to have Social Security numbers for everyone. These payments were issued through the IRS through January 15th of this year. Now, if you didn't get it, maybe they're sending it through the mail, and with the mail, honestly, lately I've seen some backups. So it's possible it's still in the mail if you're getting a paper check. If you don't get this payment, like round one, for whatever reason, and you are entitled to it, once again, now you can recalculate this payment on your 2020 tax return through this recovery rebate credit in 2021 tax season. I've had some questions where they say, well, the payment was received in this year, so it has to do with next year's taxes. That's not the case. Both of these stimulus payments will be recalculated as a credit on this year's taxes for 2020 tax year. So I just wanted to clarify that the credit applies to both rounds. And like I said, mostly everything is the same, but these phase outs and amounts change. So for individuals, the $75,000 AGI limit is the same. You'll get $600. The phase out has changed. Married couples, if you make less than $150,000, you get $1,200. Phase out has changed. Head of household, if you make less than $112,500 per year, $600 payment. The phase out has changed. And then for children under 17 years old, they will get $600. And, once again, it's the same rules, right? So if you're over that, if you're dependent over that, you're a college student, unfortunately, you won't get that. Now, you will and should receive letters in the mail stating your stimulus payments. So you should get something stating how much you're getting. Some of you might already see this direct deposit in your bank account, and see that. But if you do get those letters, save them. I like to just put this out there that just be watchful of scams. You never know what you might get. So maybe you get a letter and it says something like, you need to call this number and give us your information so that you get your payment. As always, just be mindful of those things and don't ever do that. The IRS won't email you. They're not going to call you. If anything, they're going to send you a letter in the mail, and then you can call them. And if you have any concerns, call the IRS from their IRS website contact information. So I just wanted to throw this on here to show you, the IRS is a really good tool. If you're looking for some information now, they tend to get backed up, of course. I mean, everybody has questions if they're, wanting to know where their stimulus payments are. And frankly, even some tax returns, they're still really backed up. And, that's fair to say because there are so many changes, so they're just trying to get everything situated on there. And so, you might not get answers right away. You might, see something that seems a little bit alarming, but just know that you're not alone if that's the case. A lot of people are in that same boat, wondering where everything is at this point. And here is the recovery rebate credit line that you will see on your 2020 tax return this tax season. So, again, you're not going to get the credit and the actual payments, but if you do need to claim the credit because you qualify, this is where you're going to see it for both rounds. There is a worksheet that you can use, but this is where it's all going to go. And with that, before we move on to the triple P, I just want to see if we do have any questions.
We don't have any in the queue at the moment. Kim, do you have any for us?
No, I don't have any questions on the stimulus, but I do want to let everybody know that we will be sending out the recording as well as a copy of the slides following today's training. So we will get that information out to those of you who registered.
Perfect. Thank you so much. All right, well, then we'll just get right into it. If you have any questions, just throw them in the chat, and we have spots throughout the webinar that will address them for you. So once again, round one of the triple P. Now this, like Tim said, when it first came out, there was so much information, and then it changed quite a bit throughout the year. So, we really want to try to hone in on, as simple as we can, the details of what the triple P means and how that can potentially affect your business and help your business. So we pretty much probably know what this is. Again, just want to recap. It is a forgivable loan to incentivize employers to keep and rehire employees. Now they have reopened round one with round one requirements and added round two. So we're going to talk about round two and some changes that apply to both rounds a little bit later. But just know that if you didn't get a round one triple P loan, you're going to want to apply round one with round one requirements first. You're not just skipping to round two with those requirements. In any case, it is for round one a maximum loan of $10 million for eligible entities. There are certain calculations depending on the type of business that you are, if you have payroll, actual payroll or not. We'll get into that in a little bit here. It's generally for businesses with 500 or less employees. That does include sole proprietors and eligible nonprofits. Again, this is round one. There is the payment deferral until 10 months after the expiration of the covered period. So you don't have to pay back any of the loan or interest until, say, you don't file for forgiveness after 10 months of that covered period. Then that's when that kicks in. You can use 24-week period, which starts the date of the loan disbursement. Borrowers that receive loans before June 5th of last year can elect to use either that or the 8-week covered period. There's also this alternative covered period for only payroll. I'll get into that in a little bit. It just has to do with payroll only. And then you have had to calculate your FTE count for your employees and then any salary wage calculations, because basically they wanted you to restore levels to pre-pandemic, right? So again, it's going back to what's the purpose of this? We want to keep people employed. We want to make sure that people are staying on payroll. So there are a lot of calculations that kind of fall within this and requirements, but just to lay it out here for you, and maybe with the recording, this will help. You can see which maybe applies to you. But it's essentially monthly payroll costs for 2019 or the trailing 12 months divided by 12. So it's your average for that year, that time frame, times 2.5. And then for round one, you would have had to add in this outstanding amount under the SBA disaster loan program, if applicable. And then, like I said, depending on whether you are a Schedule C taxpayer, or maybe you're a partnership, maybe your business wasn't in existence in the prior period, there are other calculations for you for round one and that. And then it would be whatever falls in for your business, and it's the lesser of that or $10 million for round one. So once again, it's based on the type of business that you are, and if you have employees. If you are a Schedule C, Schedule F filer, you don't have to have employees. They consider payroll your net income on your tax return from that business. Partners and partnerships can't apply for the PPP loans. The partnership applies and includes the partners. If you are an LLC filer, you should just follow the instructions that apply to your tax filing situation. So this is whether you file your tax returns as a sole proprietor, as a partnership, or a corporation, whatever the case, you file your tax requirement. And then seasonal businesses, which aren't really shown here, we don't want to bombard you too much, but you would have had to have been in operation no more than 7 months in any calendar year, and then it looks back at 2019. So, quick example for you. Say you're a Schedule C taxpayer, you have $12,000 in net income for 2019, and you find that on your tax return Schedule C, and you don't have employees. So like I said, for these people, payroll isn't necessarily actual payroll, right? So it's that 12,000 divided by 12 times 2.5, and you have a $2,500 loan. Let's say they got it on August 5th. So the maximum amount of owner compensation replacement, which is essentially that payroll that I'm talking about for these types of people, allowed for this person or this business is 20,833. So they fall within that category. They don't have payroll or employees. Now, hopping over to forgiveness, let's say you've done all your calculations, you're ready to file. Make sure you get your ducks in a row before you do that. You do, once again, have 10 months after your covered period ends so that you can get everything situated. You have for round one these 3 different forgiveness applications. Now, the lender has 60 days from the date of receipt of completion of the application to issue a decision to the SBA. Then the SBA will remit the appropriate forgiveness amount to the lender, plus any interest accrued through the date of payment, not later than 90 days. And then use that 10-month period, though, to really make sure you have everything you need. Maybe nothing's changed for your business, though. Maybe you have had the same person on payroll and you haven't had any decrease. And, that's the case. I mean, you can use one of these easier forms then if that's the case. So Form 3508S is essentially just that. It's a simple version of the form. So borrowers can apply for this if the amount of the PPP loan was $50,000 or less. It just requires fewer calculations, less documentation, and borrowers that use this form are exempt from reductions in loan forgiveness amounts based on reductions in FTEs or salaries and wages. Form 3508EZ, it's not this simple, but it's an easier version. So, I mean, there are some requirements that you have to meet. If you're not sure, they have instructions on there. I mean, it's very informative, and you can go and see if it applies to your business. And then Form 3508, if basically you don't fall in the other ones, you have to do the full-on form. And if you can recall, that's when you have that Schedule A, and there's a Schedule A worksheet, and there was an optional demographic form and things like that. It's a little more involved if that applies to your business. So just make sure, maybe don't go through all of the rigmarole if you don't have to, if your business applies for one of the simpler forms. And then just going back to our prior example, okay, so say you're that same Schedule C taxpayer who received that $2,500 in the PPP loan. You don't have any employees. Essentially, all of it's forgiven at that point. It's under the maximum that you can take. You didn't have people employed on payroll, so that owner compensation replacement, as they're calling it, is allowing you to just automatically use that forgiveness. So, which is really nice. And with that, I think we can go over some questions if we have any.
Yeah, so one question came in during the week was, okay, wait a minute. So I didn't apply for PPP the first time around. Am I just applying for the second round? What does that look like?
Yeah, so you definitely want to apply for round one first. Since they've reopened the eligibility for round one, you can apply for round one. We haven't seen the specific answer to the question that I have, and follow up to that is, if you take round one now, will you then be able to also take round two before March 31st, when the expiration of this loan program happens? Our assumption at this stage is that you could conceivably take both if you didn't use the money for the same covered period. So What you would have to do would be to take round one today, get your money within the next week, use it for 8 weeks, and then turn around and apply for your second round of funding, and then use that for the following 8 to 24 weeks. Again, some of those things are relatively open-ended, but we certainly are encouraging people to apply for round one first, because in most scenarios, it's the same amount of money, unless you're in the hospitality industry, which Angela will talk about in a little bit.
Okay, great. I have a couple more if it's okay.
Sure.
So I just wanted to be clear, Angela, if I'm a Schedule C filer and I received the loan, PPP round one, I automatically get the forgiveness because of the owner compensation replacement. Is that correct?
You'll still need to file a form with the bank, but the process is much more limited. Now, we've found, because we have done a lot of forgiveness applications for a lot of our customers, and we've done probably well over 100 of them over the course of the last couple of weeks. Most of the banks have not opened any forgiveness applications for the smaller loans, because of the fact that that was one of the items that was up in the air with Congress for so long, that they wanted to streamline that. They had yet to build that into their process. So for the vast majority of our loans under $150,000, we're still waiting to see the all-encompassing forgiveness process. What we are reading in the law is that for those smaller loans under $50,000, you're probably looking at a simple statement that says, I'm still in business. Everything on my application was true under the penalties of perjury. And that's probably all you're going to see. Now, as you get between $50,000 and $150,000, you'll probably have some additional simple qualifications like that. And then over $150,000, you have to start getting into different levels of, including 941s and payroll reports and full-time equivalent calculations and all those types of things. But again, most banks were kind of under the impression that there was going to be kind of a quick fly through application for the smaller loans. So a lot of them had yet to roll that out, because you've got 10 months from the end of your covered period to apply for forgiveness. So there wasn't a huge rush from their perspective to hurry up and get those things done. They were kind of pushed to make sure that they had to roll out for the forgiveness applications for the big loans faster, because that's where they were getting a little bit more pressure initially from their customer base.
Okay. And we did have a question in the chat about repeating, Angela, what you said about the loan forgiveness. And I think it kind of goes along this line. So is the borrower with a loan of $50,000 or less exempt from any reductions to the loan forgiveness amount? So I think that's what they're looking for some clarification on.
Yeah, you should, for a loan under $50,000, what you should be exempt from a lot of the FTE, full-time equivalent calculations and safe harbor reductions. However, what you won't be exempt from is that blanket certification that you're going to have to sign off that you use the money for payroll. Or if you're a sole proprietor, you'll have to, a sole proprietor, you'll have to certify that you're still in business, and things like that. So we've seen a wide variety of different situations in terms of forgiveness applications. Somebody just commented that another bank had received forgiveness for under $50,000. There is no consistent answer, unfortunately. Every bank, every institution has very different rules, and you'll find that the larger banks are going to be the ones that are really holding off on rolling out a lot of the smaller forgiveness applications, because it's a tremendous effort for them to roll out something and then change it. So you'll see a lot of the smaller community-sized banks or different institutions will probably come up with different ways to hurry up and get these things off their books, because the banks are incentivized to get these loans forgiven, because once they're forgiven, the bank then gets their check from the SBA. So for those of you that are dealing with a smaller bank, you may see some different abilities than you do with a Chase or a Wells Fargo or something like that. But those smaller community banks have been a lot more nimble through this entire process.
Yeah, great. Okay, great. I think that's it for questions. I know I see here that one group did apply for forgiveness at $39,000 and did a lot of paperwork, but there is now a simplified forgiveness application. So your bank should, I know we were just above that threshold, that 50,000. And so we've been waiting for that below 150,000, that sort of simplified form, so that we could get our forgiveness application submitted. So.
And I'll tell you, Kim, our general rule of thumb that we've been communicating to a lot of our clients is that if your loan is less than $150,000, it's in your best interest to wait to get forgiven. For that reason specifically is that you want to be able to get it forgiven with the least amount of documentation possible, especially because we don't know what happens down the road with this program. So the least amount of auditable information that you have to provide in any scenario with the government is the best. So it's the best practice to, if you can, hold on your forgiveness application for those smaller loans. I know a lot of people just want to get it off their books, but this is a scenario where you're going to save a lot of time, energy, and dollars and potential for future audit ramifications by just being patient and waiting through the process as the banks and the SBA continue to establish the rules and guidelines.
Okay, great. So Angela, before we go on to PPP Round 2 discussion, I just want to mention to today's participants, we will send out the slides and the recording. So if you jumped on a little bit late, no worries, you didn't miss anything. You're going to get it via email. So I just wanted to make sure people know you will get the recording and the slides from today's presentation. So Angela, let's
rock and roll. Thanks, Kim. All right, so we'll move on. I'm sure we'll have some more questions at the end. So now that we've talked about round 1, we're going to talk about round 2 for the PPP. Now, this is a maximum loan of $2 million. It's different from round 1, which was 10. It's generally for businesses with 300 or less employees. Now, that's also different. It's per physical location, includes sole proprietors, eligible nonprofits, and it is up to 2.5 times your average monthly payroll costs. Now, the difference with this one is that, like Tim had said, entities in accommodation and food services industries can get a loan of up to 3.5 times their average monthly payroll costs. So round 2 for those types of businesses can get 3.5 times. Now with this loan, this is where we're going to have to wait for a little more guidance, maybe do some more digging, is like what Tim was saying about, can you do round 1 and round 2 basically all in 2021? For those who got a round 1 loan already, you must have used or will use the full amount of your first PPP loan on or before the expected date to receive the second one. So you don't have to apply for forgiveness, but you need to make sure that you either use or anticipate to use the full first loan before you receive the second one if you qualify. And once again, if you're a first-time borrower, you have to go through the PPP 1 requirements first. Now with PPP Round 2, you must show at least a 25% reduction in gross receipts in any quarter of 2020 relative to the same quarter in 2019, or all of 2020 relative to all of 2019. So you have to show that your gross receipts have declined 25% or more. You do not include any forgiveness amount from the first PPP or any EIDL advance in your gross receipts. For purposes of what gross receipts means, gross receipts generally is all revenue in whatever form received or accrued in accordance with the entity's accounting method. So whether you're accrual or your cash, from whatever source. So it could be sales from products or services, interest, dividends, rents, royalties, fees, commissions. You're going to reduce that by returns and allowances and exclude net capital gains and losses. Now, for nonprofits, gross receipts means the gross amount received by the organization during its annual accounting period from all sources without reduction for any costs or expenses. So you're not going to take into consideration cost of goods sold for nonprofits and things like that. Now, remember, this is not a taxable loan. Nothing of this is going to be taxable to you if it's forgiven. Tim, I don't know if you want to chime in a little bit on this whole cost of goods sold for certain types of entities. I know that can be a little bit tricky.
Yeah, so I did include a link for everybody to refer to. This was just released on January 19th in regards to how to calculate revenue. This is really the only tricky part of round two, and it's causing us to spend a drastic amount of additional time versus round one. Because we've got to make sure that people's financial statements are accurate enough to certify this 25% reduction in revenue. So be prepared to have to certify your revenue when you go in for an application. The SBA rules initially stated that you weren't going to have to certify your revenue reduction if you took a loan under $150,000, but most banks that we have seen thus far, and we've submitted a handful of these applications already, are requiring financial statements. Internal financial statements will suffice. They don't need to be signed by a CPA. They don't need to be audited. But you as the signer on the loan will have to sign every page of it and certify to its accuracy, again, under the penalties of perjury. So be cautious about making sure that those financial statements are accurate, number one. Number two, there are some interesting little nuances about how they define revenue. One of which in the original instructions for the application says that you are to include your gross receipts plus your cost of goods sold. Now, for us accountants, we looked at that and said, well, that's got to be a typo. We were originally quite confused about that part. I've had some in-depth discussions with the SBA office in Cleveland, as well as the group of CPAs that we work closely with here in the greater Ohio and Pittsburgh, or Ohio and Pennsylvania area. The reason that is there is for businesses that were still negatively impacted but had increases to their revenue. Now, for example, businesses that are in the high volume, low margin type industries, such as the folks that trade steel. Steel prices are always extremely volatile, but were down drastically in 2020. So they may have sold a tremendous amount more steel, but when you incorporate the cost of goods sold in that revenue calculation, then their gross revenue ends up decreasing. So it's worth making sure that you're paying attention to. Also, it's probably in there to prevent people from trying to get too aggressive about how they're modifying their financial statements to potentially force themselves to qualify for the 25% revenue reduction. So again, all the more reason that this is something that you review with your CPA, you review with your advisors, you make sure that you're spending the time to ensure that revenue reduction certification is accurate. Because again, you as the owner of your business are the one that is that's going to be signing and ultimately taking the responsibility for the certification of that revenue. So be careful, look at this part very closely, make sure you do your homework. And if you qualify based on all of that additional research and effort, fantastic. But just be cautious, because this is an area that's going to undoubtedly be looked at closer in this round.
Yeah, for sure. So just make sure that you're covering yourselves and, kind of keeping that documentation and substantiation, whether or not your lender is requiring it when you file originally, you're likely going to have to submit it at some point. And then a question that I've gotten is, if say you weren't in business in 2019. So for entities not in business during 2019, applicants must show at least a 25% decline in gross receipts from any quarter in 2020 compared to the first quarter of 2020 when the business was in operation. Now, what this means is you have to have been in operation by February 15th of 2020. So if you weren't, say you started after that, maybe in March or something, then you unfortunately wouldn't qualify with this. But if you were in business prior to that, you would just take that first quarter and then compare it to any other quarter in 2020 to see if you qualify for round two. And then, of course, just like round one, you have to make sure you're bringing people back, restoring things to levels prior to the pandemic. And for forgiveness, you will have to spend at least 60% of the funds on payroll. And now you do have the option of the 8-week covered period or the 24-week covered period, just depending on what you prefer. The first round, it depended on that June 5th cutoff date, and then that's when you had that option. But this time around, you can choose. So whichever you think would be fine with your business. And then the loan, okay, it's like pretty much the same. Once again, it's 2.5 times your average monthly payroll costs, but 3.5 for a combination of food services industries. Once again, Schedule C, Schedule F filers have that other calculation. Partnerships, you're taking into consideration some other things here. And then if the business wasn't existent in 2019, or seasonal businesses, you have separate calculations which are provided online if you were looking for more information. But for purposes of the webinar, we'll keep things kind of rolling around. Just know it's basically round one, how you would do that, or it's the lesser of 2 million. So whatever applies to your business and the lesser of that, or 2 million for this. It's not reduced by the outstanding amount of the EIDL like round one. So you don't have to take into consideration, even for your forgiveness, the grant or the loan. This one's slightly different than that. So PPP round two loan amounts will pretty much be identical to round one amounts, unless businesses want to include maybe all potential payroll costs, or like Tim was saying, some other things. So just, take into consideration what might have potentially changed for you. If you qualify for round two, awesome. Why not? This is what the application for round two looks like. It's very similar to round one. Of course, you're going to have to put, the business name and, the address and what type of business and things like that, and do some questions at the bottom. Then you're going to show your average monthly payroll and multiply that out and such and such. So you will have to show your reduction here. So it's going to ask you, did you have that reduction or not? And as Tim once again said, you have to certify that, and you want to make sure that you can prove that your certification is correct. So it's, again, very similar to round one. And as you can move on to the second page, you'll have to, do some more initially, just like you would have done for round one. One of the things that you just want to make sure is that you want to say that the current economic uncertainty makes the loan request necessary to support the ongoing operation of the applicant. So, fill this out as best as you can. If you're not sure, just reach out maybe to your accountant or someone for advice who maybe can guide you. But if you clearly qualify, this is where you initial it. If you're not sure, just ask and then move forward. And then this is just the last page. Once again, we're not going to go through every single line, but it's very similar to round one. So let's just do a quick example. Then we'll take a couple questions, but then we'll probably just want to move it right along and maybe take the majority of the questions at the end if there are any. So in this example, we're going to say company ABC took a round one PPP loan, use all the funds. So they've already used everything up. They made $20,000 in sales in quarter two of 2019 in gross receipts. They also made $15,000 in sales gross receipts in Q2 of 2020. Therefore, they're showing that reduction of at least 25%, and they qualify for this second round PPP loan. And then the forgiveness requirements, as they are right now, are going to be the same. So, your FTE count, your salary and wage and whatnot. And I'll kind of get into that a little bit more later. So do we have any questions that we can go through really quickly?
We're looking good over here.
Yeah, let me just do a real quick look here. I think one of the questions that someone had was, how long should I keep my PPP records?
Yeah, so I would say retain your employment, your payroll records for 4 years, and then other records, they're saying around 3 years. So, if you can, just keep them, because it's not going to hurt you. If anything, it's going to help you and save you some hassle down the road, if and when you were to be required by the SBA to submit them. So I would say payroll is 4 years, other records would be 3.
And
Okay,
generally
great.
speaking, the IRS encouraged retention period for all tax returns is 7 years. So, I mean, for the SBA, we're looking at 3 to 4 of potential audit exposure. But, just I tend to give people a little bit longer. I know some people keep stuff for forever. So 7 years is always a good rule of thumb for all of your payroll records anyways. But in regards to this program, 3 to 4 years is applicable. But
Okay, great. So I have a couple that came in. So first, let me just ask, PPP loans are not taxable, correct?
That's correct. Yeah, there was a lot of back and forth about this. I'll try to give this as fast as I can. Originally, the intention of Congress was to make these non-taxable. The IRS came in and said, sure, when you forgive it, it's not taxable, but we're not going to allow you to take the deductions that you've used to achieve forgiveness. In the most recent stimulus package that was passed at the very end of 2020, it explicitly stated that there are no taxable ramifications, and the deductions and the expenses used to incur forgiveness are fully deductible.
Okay, great. Thank you. And then I also have another comment here. Somebody who's on the line, who's part of a nonprofit organization, said that it may be worth mentioning that her bank is telling her that the application process for nonprofits this go around is different. So I'm unable to apply until their internal bank team handling nonprofit contacts her for guidance.
Again, I will tell you that the rules for every bank will be drastically different. There were some banks that opened up their portals last week. There are some banks that are just opening up right now. And there are still some banks that have not even opened for applications for round 2 yet. So every bank at every size is going to be drastically different. We've seen some banks that are ready to take applications for nonprofits. We've seen a lot that are not. You're 100% correct, though, is that there are some additional stipulations in regards to how nonprofits are treated for this round.
Okay, great.
Awesome. Yeah, so I think we'll just get right into the changes that apply to both rounds. And part of that is what Tim was starting to touch on with that question. So we'll just hop right into it. Great. So they made a change to eligible expenses for both rounds. So, of course you have payroll, and then you could use it on business rent, utilities, mortgage interest, and whatnot. So now they're saying, okay, operations expenditures, property damage costs, supplier costs, covered worker protection expenditures are also eligible costs for both rounds. So, once again, you want to make sure that you're using at least 60% of the funds for payroll, but maybe the rest you want to use towards these other types of costs. And maybe some apply to you, some don't. So these additional ones that they've added should hopefully help you out there. And then, once again, you have to have been entitled to claim this deduction, just like round one, must be paid or incurred during the covered period. Now, the alternative covered period, like I kind of said before, that's only for payroll, and that's just to help match up your payroll dates with the loan. So if you receive the loan on that Friday and your Monday comes your first payroll cycle, maybe you want to use that and align it with that Monday. You could start your payroll costs on that Monday and elect that when you're applying for forgiveness. And then that will just make things easier. It'll make it look prettier, essentially, and easier to follow. But paid or incurred, not both. You can only use the expenses one time. And then rent or lease agreements for real or personal property apply. So again, the changes are highlighted in red here: operations expenditures, property damage costs, supplier costs, and covered worker protection expenses. And as we move along, everything that is in red are the changes that you'll see. So we wanted to spell out what was, what is, and what's changed. So forgiveness won't be reduced. If you receive that EIDG grant, that was through the SBA, so maybe you got $1,000, maybe it was up to 10,000, so maybe that applies to your business. Previously, you had to reduce your forgiveness by that amount. Now you don't, with the recent changes in law. Some other things just to remember, if you've offered to rehire people and they refused, if you couldn't hire people to fulfill positions, you fired an employee for cause, or you couldn't return to levels prior to the pandemic because of other compliance issues and things like that, if an employee voluntarily resigned, all of these things that you see here, you won't be penalized for, as long as you're just keeping documentation, do your due diligence, and show that you've done what you can as the business to get those levels back to where they were. But again, the EIDG will not reduce your forgiveness for both rounds. Your forgiveness will be reduced, though, just again to recover or to recapture if you don't use the loan over the covered period for those eligible costs. So you can't spend it on like personal items or things that don't fall within those eligible cost categories. Your forgiveness will be reduced if you do. If you don't restore your levels, okay? So, once again, if you fall within that category of the 50,000 or less, things will be a little different when you apply for forgiveness. But again, the intention of these rounds of the PPP are to get people back on payroll if you had let them go. You don't need to rehire the same people. You just want to get your FTE count back. So FTE, that would be people who work 40 hours a week. Although it doesn't necessarily apply to each employee, you may have a couple part-time people together get to that 40-hour work week. But so, you may have two part-time people and one full-time person that was there, and these two part-time people took their position. That's going to be essentially one full-time, one FTE count, because although it's 2 versus 1, you're still hitting that 40 hours if that applies. And hopefully that makes sense. But again, just remember, FTEs are important. Your wages and salaries are important through that. And then you can use a simplified or the actual method in doing your FTE calculation, which we don't have here for this webinar, but it is essentially that your actual are your actual hours. Your simplified is a simplified method that they've come up with. And then you can use whichever one is more beneficial to your business. Tax treatment, like Tim said, the expenses paid with the proceeds of the loan that are forgivable are deductible, and the forgiven loan is not taxable. So this is really good for businesses. As long as you're getting it all forgiven, it's not going to affect you on your taxes. Forgiven PPP amounts are not subject to Ohio CAT. So for those of you who need to file Ohio CAT, maybe you're an annual or a quarterly CAT filer, you don't have to include this forgiven PPP on that. The forgiven loan will be on the books as other income. On the tax return, it will be a permanent difference on the M1 as an adjustment for income on books, not included on the tax return. And then for pass-through entities, the forgiven portion will be considered tax-exempt income. So therefore, when you're doing your basis, it's going to be an increase of ownership interest because it is tax-exempt income at that point. And so, you want to add that back into your basis. Just on a side note, the EIDL advance grants are included in gross receipts and subject to CAT for Ohio. Local grants are also included in gross receipts and subject to Ohio CAT. I just wanted to throw that out there since we did mention the commercial activity tax with Ohio. And then for the employee retention tax credit, this is something that they recently changed with that law as well. So if you can recall, the CARES Act had implemented this tax credit for wages to employees when business operation had been affected by the pandemic. Businesses that received a PPP loan are now allowed to take this credit. However, the credit is not available for the wages that are paid with the proceeds of the forgiven PPP. So you can take this credit with the PPP, but you can't use the expenses for both. No double dipping, right? Just think of it like that. So maybe you want to do 60% of payroll, but then instead of using all of your loan for the PPP on payroll, you can use those other eligible expenses that we now have and take this employee retention tax credit to utilize those leftover payroll costs that you would have used for your PPP and put that towards this credit if you so choose for your business. Businesses can file amended payroll tax returns to claim the credit, so it is retroactive. Again, just make sure that you're keeping records of your PPP expenses and you're able to trace back to substantiate the forgiveness. And if you do take this credit, that you do the same thing so that you can show where everything's coming from when you apply for forgiveness. Now, I just want to throw this out there for you. We do have a page on our website specifically for COVID-19 resources, which we do update pretty regularly, and we do send out a lot of newsletters. So if you're interested in staying up to speed on the ever-changing laws that are out there today with this world that we're living in, feel free to subscribe. If you need help and you just want to look at the page, by all means, please check it out. We're just trying to help out as much as we can to get you this information because we understand that it's very complex and we're just trying to get the easiest way of this information out there to you. So this is our HD Davis CPAs website. And again, my name is Angela Johnson. Here is our contact information for both Tim and myself. If you prefer to contact us directly with additional questions, please feel free to do so and we'd be happy to help. So with all of that, I think we're right about at the end, maybe some final Q&A.
Yeah, I think there's one additional question here that I see. Do I need to submit documentation to substantiate the reduction in gross revenue if my gross revenue was less than $150,000?
Yeah, I would be prepared to substantiate your gross revenue no matter what. The easiest way to do that is going to be with financial statements, but some banks have given us some other options such as bank statements or annual tax filings if you are showing an annual reduction of 25%. For the whole year. So in all of this, throughout all of these programs, we were extremely involved in round one as soon as it came out. We've been very involved in this since they have been writing the law and following it all the way until today. We've encouraged people to be prepared for more. The rules change. The banks are continuing to implement new rules. They may not require it of you initially when you apply, but you may get an email back from the SBA a week, 2 weeks, a month later that says, hey, we need substantiation for the information that you've provided. Please submit it. So the more ready you are and the more prepared you are, the faster that you will either lock in your money or potentially achieve forgiveness on your loan.
Okay, great. Well, so thank you so much, Angela and Tim. This was really great. We appreciate all of the information you shared. I want to, just really thank you to both of you, and wanted to give one more shout out to our annual sponsor, Geauga Medical Center, for their generous sponsorship of Geauga Growth Partnership. You will, those of you on the line, will be receiving 2021 sponsorship package from GGP in the mail soon. We hope you'll become part of our sponsors for 2021, whether it's an event or a webinar, or in whatever way you choose to support us. We appreciate that. It helps us to do our work throughout the year. So I also would encourage you to consider joining us next Tuesday, January 26th at 9:30 a.m. for a session titled COVID-19 Beyond the Virus, Impact on Mental Health and the Use of Drugs and Alcohol. During that session, we're going to hear from our local leaders from Ravenwood Health and Lake Geauga Recovery Centers, and they're going to share more about the impact COVID-19 has had on their services, as well as Geauga County residents and businesses. In addition, we'll have a few words from Tom Quaid, our Geauga County Public Health Commissioner, who's going to provide an overview of Geauga County's current COVID-19 status and an update on the vaccine. So it's a session you won't want to miss out on, and hopefully you are already registered for that. But if not, you received an email yesterday with that link. So if you need more information on that, just send us an email at info@geaugagrowth.com. and we would be happy to get that out to you. You can also view our website at geaugagrowthpartnership.com, and we do have some COVID-19 resources on there for your business as well. So again, Tim and Angela, this was fantastic. I've gotten private messages saying this was great. Thank you so much for coordinating this. So you really helped us to dispel some of the confusion and clear the cobwebs so that you made a lot more sense out of a very complicated discussion. So thank you so much. And we hope you all have a great weekend. Take care.
Thank you very much.